We got some more encouraging news on the inflation front this morning. The producer price index inflation numbers, or the PPI inflation numbers, they're the wholesale prices businesses face with their input prices, actually declined month over month by 0.2% compared to an increase of 0.1% economists estimated. And then the year over year increase came in at 2.2% compared to the 2.5% economists estimated. Core PPI, which is minus volatile food and energy, also came in lower than estimated at unchanged month over month compared to 0.3% estimated. And then for year over year, it came in at 2.3% month over month compared to 2.5% estimated. This combined with yesterday's cooler than expected CPI inflation numbers, I think ultimately the Federal Reserve will like, and I think the Federal Reserve really should take these two metrics into account. Once inflation falls, the trend usually continues. Prices are obviously still high, but the rate of increase is important. And if the rate of increase is starting to go down or starting to decline in price, as we saw in today's producer price index inflation report for month over month declining, that is good news in the Federal Reserve's fight against inflation. The Federal Reserve only penciled in one rate cut yesterday. I think it'll actually be two, perhaps even three, if this trend continues in the June reports. Obviously, we have to see. I think this will be good for the markets. The markets reacted well to this report. Let's see how the markets do today. And I also wanted to talk a little bit about Tesla. The Tesla shareholder vote passed in terms of Elon's $56 billion compensation on a commitment already made to Elon. These were high goals set in 2018, and Elon hit all these goals despite many obstacles. And it's not like they were paying him $56 billion in cash. Look, he 10x'd the company's value from about $56 billion to about almost $600 billion today. So he hit those growth targets. And what this pay package does is it gives him options in terms of buying Tesla shares at a lower price. So it's not like they're giving him a $65 billion bonus. It's the fact that he could have $65 billion worth of shares at a lower price, which is pretty good. And ARK Invest CEO Cathie Wood, after this vote, upped her Tesla price target, saying by 2030, her base case is $2,600 a share, bear case is $2,000, and bull case is $3,100. This is mostly due to Tesla's robo-taxi network that she thinks will really be used, nationwide, and she thinks it'll be a huge growth driver for Tesla's revenue. On top of that, Tesla collects over 100 times more data than its nearest competitor, and the data it gets, it's not lines of code anymore. It's actually data that's used on a neural net, like artificial intelligence. So autonomous driving and robo-taxis, and the fact that Tesla is doing so much work with clean energy, and it's helping accelerate clean energy around the world. And I really think of Tesla as a technology conglomerate. I think its biggest competitor is NVIDIA, because NVIDIA also has a self-driving unit, and they have advanced chips that help them with their technology. But I view Tesla as a clean energy technology conglomerate with its artificial intelligence and upcoming robo-taxi network. So revenues for robo-taxi, ARK Invest is projecting $951 billion by 2030, and that's pretty huge. But in my opinion, I'm not sure if Tesla will reach her base case. That's pretty ambitious. That's a 15x from here. I wouldn't be surprised, though, if Tesla's price by 2030 hits her bear case, which is still pretty optimistic at $2,000 a share. But ultimately, I think it'll probably be between $1,500 and $2,000. That's a little cautious, at least compared to her ambitious goals. But let's see what happens. I'm pretty optimistic for Tesla in the upcoming years to come, especially with this clean energy transition and its autonomous technology and robotaxi platform.